Welcome to another episode of Time, Talent, Treasure Radio from Stewards Planning Group. Stewards Planning Group is a company that specializes in helping you build purposeful retirement plans. Custom plans that not only help clients steward their treasure, but also their time and talent as well. They believe if you're taken care of financially, you can go even further to make the family, community, and kingdom impact you truly desire to make, which is the ultimate purpose of wealth. If you'd like to set up a no-cost, no-obligation meeting with one of their financial advisors, please give them a call at 222-4236. You can request a meeting at stewardsplanning.com, or you can simply stop by their office on 19th Avenue Southwest in Wilmer.
Hey everybody, and welcome to another episode of Time, Talent, Treasure Radio. I'm your host, Ben Taatjes, and once again, I am joined by a co-host, Jonathon Shofner's in the studio with me. Jonathan, how are you?
I'm doing great. Thanks, Ben.
Yeah, it's fun having you on another show. Last week, you and I did a show. We talked a lot about market volatility. We talked through, I think, really important, like the values of just being disciplined and not letting the headlines and what we know is part of regular investing is volatility. Of course, when there is a ongoing conflict in the Middle East and there are other things causing disruption in the markets, uncertainty means that we're going to have some days which are volatile, and that's something that you and I were talking about last week on the show. And then, of course, as we meet with many clients throughout the week, these questions come up. And I thought you brought up a really interesting point, both last week and certainly in a meeting we had together with a client. The client was talking about their required minimum distributions, which we'll kind of walk through with our listeners. Again, I don't think we can share it enough just how that works, because we still get questions on them. And this individual's like, well, when should I take it? Should I take it all today? Should I wait till the end of the year? And I thought some of the wisdom that you gave in that meeting really would be good for our listeners today to hear. So let's talk about required distributions. First of all, I'll just ask, how do we decide how much has to come out of somebody's retirement account?
Yeah, so it's actually taken from the value of the IRA on December 31st the following year, so 2025. So a lot of clients are asking how much that is and when to take it out, and I'm just running across this more and more every day.
Yeah, and I think right now we have that number, right? So now we're in March, and we're kind of used to this. We know what the year-end value was, and the calculations are based on a table, of course. And I think before the age has changed over the years. It used to be 70 and 71 and 72 and 73, 74, and it depends on your age. So we really can't tell you how much it is, but it starts with figuring out what the value was at the end of the year, and then your date of birth, and then we can actually give you that calculated number. And again, the IRS wants to tax us. They want to be able to take a distribution, of course, force you to take a distribution. That's the only way that you can pay. They can get you to pay the tax that you've owed. These are all accounts that are tax deferred. So if it's an IRA or a SEP IRA, many people have old 401ks, and if they're not working at the company anymore, that too, required to take that distribution. When it comes to the question of when I should take that, should I take it all now? I mean, theoretically, we know what the amount is. Should people just be taking it out all at once now, or should they wait till later in the year? Give me some pros and cons to that part of the conversation.
Absolutely, and everyone's situation is different. So, and tax ramifications and things like that. But I've been recommending clients take it out monthly. It's easier to spend, easier to track instead of getting one lump sum. But, everybody has a different situation. So, we can go and take a deep dive and really see what's best for each individual client.
Yeah, I like that approach, and I think you're onto something there. Many of us have been conditioned over our working years. When you get a paycheck, that paycheck comes in on a normal time during the week or the month, and as you get paid, then you have that amount in your checking, and you're free to then start spending that amount. Hopefully, you've got a spending plan that you've designed with your financial person. But something that I've noted with many clients in the retirement phase of life is that when they lose that regular paycheck, they might get Social Security, but that regular paycheck that came the same time goes away. So I agree with you. I think both for the reason of the psychology of spending the money, and for just the simple reason of it's convenient to have a regular recurring amount, I would much prefer that over, certainly, I'm picturing myself someday being retired and having to call my advisor and call my financial person to say, hey, I need so much money to spend. I'd rather just set it up on a regular recurring withdrawal from that account. And we can put that right into their bank account and make it real simple, right?
Absolutely. It's very easy.
Yeah, so working with a planner, I think, is step one. Coming up with your own financial plan, what we call a steward's plan around here. Remember, the second question that we're asking clients in the steward's plan is, how much do I need now and in the future to live on? Many people, when they look at their statement on a retirement account, it's the wealth behind the account. What we're driving at there is the income. And there's a huge difference there. Income planning and making sure that we are being careful not to get somebody in the wrong tax bracket. We're looking at all different scenarios is huge. The other thing we talked about with this client that I'm referencing in that meeting together was also in conjunction with the required distributions, doing some Roth conversions. And there's a common trap there, isn't there? A common mistake that advisors and clients will make, isn't there, when it comes to doing Roth conversions and required distributions in the same year?
Yes, absolutely. We don't want to trigger them into a different tax bracket. So, we're going to be looking at market downturns and other situations to make sure they're not paying more tax than needed.
Yeah, and I think you brought this up in the meeting too. It was a situation where we're combining both. It was a year we had to do required distributions because the person was of the age where they had to take those, and they want to do some Roth conversions. But a RMD is not satisfied when you do a conversion, correct?
Correct.
Yeah, so in addition to taking the RMDs, we were able to fill up the rest of the chosen tax bracket for this client, and then backed into how much was still allowed, right, for that Roth conversion, which I still think can be a strategy that works even while taking required distributions. Part of that plan that I thought was really beneficial for that client was it also integrated qualified charitable distributions, or QCDs. So which of course does count towards your required minimum distributions. So there's a lot of alphabet, a lot of ABCs here we're going through, but when you look at RMDs and QCDs and all the other rules, it's another reason we just think it's important to come in, see one of our advisors. We'd love to talk to you about that, really educate you on that, and really show you the best way to steward the resources that you've been entrusted. And that's where we'll leave you today. So until next week, from all of us at Stewards Planning Group, steward well.
Ben Taatjes is a financial advisor at Stewards Planning Group. Securities offered through Cetera Wealth Services, LLC. Member FINRA SIPC. Advisory services offered through Cetera Investment Advisors, LLC. A registered investment advisor. Cetera is under separate ownership from any other named entity. 1104 19th Avenue Southwest, Wilmer, Minnesota 56201. The views depicted in this material are for information purposes only and are not necessarily those of Cetera Wealth Services, LLC. They should not be considered specific advice or recommendations for any individual. Neither Cetera Wealth Services, LLC nor any of its representatives may give legal or tax advice.